Welcome back to Explain the Charts, your go-to channel for in-depth stock analysis. Today, August 8th, 2025, we're diving deep into Meta Platforms, symbol Meta, following their groundbreaking Q2 earnings report. The news has been overwhelmingly positive, with Meta reporting results that significantly exceeded expectations, propelling the stock higher. This strong performance is largely attributed to robust revenue and earnings growth, coupled with optimistic guidance for the upcoming Q3. A major catalyst for this positive momentum is Meta's aggressive push into artificial intelligence, backed by substantial capital spending on AI data centers. This strategic investment is viewed as a significant long-term play, reinforcing analyst optimism across Wall Street. Looking at the daily chart, we can see the broader context of Meta's journey over the past year. Observe the significant price movements over the last few months, especially the rally from early 2025. We saw a strong uptrend from January, reaching new highs into February, suggesting consistent bullish sentiment. However, April 2025 presented a notable challenge, indicated by that sharp downward move. This dip around the end of April likely corresponds to the Q1 2025 earnings report, which perhaps didn't meet the market's high expectations at that time. But even after that significant pullback, notice the powerful rebound that immediately followed. This demonstrates a resilient market demand for Meta, quickly absorbing the selling pressure. Now let's zoom into the most recent, pivotal event, Meta's Q2 2025 earnings, which were reported around late July. If we focus on the 1-hour chart around July 30th and 31st, you'll witness the explosive reaction. The price dramatically gapped up on July 31st, surging from a previous close around $695 to open well over $770. This initial surge of over 11% perfectly aligns with the news of Meta's strong earnings beat. The stock even hit a new 52-week high of $784.75 in the immediate aftermath of this report. This massive volume spike confirms the strong institutional and retail interest driving this move. Switching to the 15-minute chart, we can examine the very short-term price action since the earnings high. While the overall trend remains bullish post-earnings, we've seen some choppiness and slight pullbacks. For instance, the price dipped about 1.32% in the last 24 hours from its recent highs, currently trading around $761. This suggests some profit-taking or minor consolidation after the explosive move. The $784.75 level, the new 52-week high, now acts as a key resistance level. Immediate support for Meta can be observed around the $745 to $750 range, which held during the initial post-earnings dip. If this level breaks, the next significant support would be the pre-earnings consolidation around $690 to $700. Looking ahead, there are compelling reasons to be bullish on Meta Platforms. The outstanding Q2 results and positive Q3 guidance paint a strong financial picture, indicating continued growth. Their substantial investments in AI infrastructure, including the recently secured $29 billion financing, position Meta for long-term technological leadership. Analyst consensus remains a moderate buy, with an average 12-month price target of $822.41, and some even project targets as high as $980. The U.S. government's stance against the EU's Digital Services Act could also ease potential regulatory burdens for Meta, which is a positive. However, some cautionary notes remain for short-term traders. The recent slight pullback and inherent volatility after such a sharp run-up could lead to further consolidation or minor corrections. Competition from platforms like TikTok and the rising costs associated with attracting top AI talent are also factors to monitor. For long-term investors, the overarching bullish trend and strategic AI focus make a compelling case. Short-term traders should watch for continued sideways movement or retests of immediate support before considering new positions. To summarize, Meta is currently trading around $761.83, with the all-time high resistance at $784.75. Immediate support levels are around $745 to $750, followed by a stronger base at $690 to $700. We see a high likelihood, approximately 70%, that Meta will continue its upward trend towards the analyst average target of $822.41, especially if it breaks and holds above $784.75 with strong volume. A short-term consolidation or pullback to the $745 to $750 range has a moderate likelihood of around 25%, particularly if the broader market weakens or profit-taking continues. A significant bearish reversal is unlikely, around 5% probability, given the strong fundamentals, unless major unforeseen negative events, like a very poor next earnings report or a market-wide crash, occur. Keep an eye on the volume during price movements. Sustained high volume on upward moves reinforces bullish strength. Also, monitor news regarding Meta's AI developments and any updates on global regulatory landscapes. These factors will be crucial in determining Meta's trajectory in the coming months. That's all for today's in-depth analysis of Meta. Don't forget to like, subscribe, and hit the notification bell for more chart breakdowns from Explain the Charts.